The crisis that has engulfed China's most indebted property developer, Evergrande Real Estate, should serve as a warning to the Chinese government. The company's woes have been well documented. Nearly $100 billion in debt, a share price down 70% from its peak, and an inability to service interest payments. But there is one factor that has received less attention: land. Property developers like Evergrande are dependent on China's local governments for their land supply. The country's economic growth over the past decade was fueled by land sales, which accounted for 90% of local governments' fiscal revenues in 2011. The Chinese property market was booming, and developers were hungry for land to fuel that boom. Local governments were only too happy to oblige and sell land to developers at artificially low prices, effectively subsidizing their business models as they sought to maximize their fiscal incomes. But it is not just Evergrande that will suffer if this changes. Even the Chinese government depends on this system working to maintain economic growth and ensure social stability. If the recent changes in China's land policy continue, then both could be seriously threatened. For the uninitiated, Evergrande is a China-based property developer that was once lauded as a model for China's economy. With its fast and furious growth, the company became one of the largest developers in China, with many analysts and industry players saying that it could become the largest in the world. Evergrande China Property Group Limited is a company that would seem to embody many of the problems that plague China's economy today. It is controlled by Hu Kaiyan, China's richest man and a member of the well-connected elite known as the Princelings. It has racked up massive debts, by some estimates close to $100 billion, in its pursuit of rapid expansion in China's overheated real estate market. And it has turned to increasingly exotic forms of financing as traditional lenders have become more cautious about lending to such companies. Yet Evergrande's difficulties may shed light on China's economic future in a way that those of many other companies cannot. That is because Evergrande's main asset, and indeed the main asset of all property developers, is its access to land, which is ultimately controlled by government officials charged with promoting economic growth. In short, much of what these companies are selling is political influence. Recently, though, Evergrande has been plagued by liquidity issues. The company's debt has grown dramatically over the past few years, threatening to break the company apart. Evergrande is not unique in this regard. While most of China's property developers have been able to grow quickly through aggressive borrowing at low interest rates and controlled land supply, they are now beginning to lose steam as debt levels rise and land sales slow down. The reality is, there is not enough land available for sale in China for these companies to continue growing at their current pace, and if they try to slow down their growth, they will run into problems with their creditors as well as other problems such as rising interest rates and tighter credit conditions. The good news is there is a way out of this dilemma: government-backed special purpose vehicles, or SPVs. Evergrande's business model was very simple. The company would buy land at whatever price it needed to pay to acquire the land, and then sell that land at a later date for a higher price to another developer. Evergrande did not develop the land themselves. They were simply speculating on the value of the land, normally holding it for no more than 1 year before selling it on to another developer. From this simple business model, Evergrande grew from being a small regional developer into one of China's largest developers, and almost overnight became one of the country's most indebted companies. In 2013, Evergrande had a debt-to-asset ratio of 102%, but by 2016, this had reached an astonishing 390%. At its peak in 2018, Evergrande had a total debt of 1 trillion RMB, or 150 billion US dollars, which was over 6 times its market cap. This is officially the highest single company debt in China's history, with only about 8% of its assets backed by equity. Even today, its debt-to-asset ratio is still around 300%. Recently, much of the focus on China's corporate debt has been on Evergrande, a Shenzhen-listed real estate developer that is one of the most indebted Chinese companies. Its bonds have fallen to distress levels, and it has been in the news headlines recently as it faces a liquidity crunch. What is interesting about Evergrande's situation is not just its debt, but that it has become a proxy for much larger questions about China's real estate market, and more broadly, the economy. The first question is whether Evergrande will be a Lehman moment for China. That is, if it defaults on its debt or if regulators allow it to default. Will there be a contagion throughout the financial system? The second question is whether Evergrande's plight will cause a tipping point that would push China into a severe downturn or even into recession. Is this what we should expect from an economy where real estate construction accounts for about 20% of GDP? This is due to a confluence of factors: a recent collapse in the price of its shares, a decline of almost 50% from its 52-week high, reported defaults on some of its bonds this summer, and the company's admission that it faces severe liquidity challenges, all coming at the same time when there is increasing concerns about a possible economic slowdown in China. To make matters worse, Evergrande is also facing another major issue: disgruntled homeowners who have been unable to get their new apartments delivered on time by the company. Tens of thousands of angry homeowners across China have been voicing their complaints online and even rioting in front of Evergrande branch offices. In response to this mounting crisis, Evergrande announced on October 1st that it will be seeking a debt-to-equity swap with its creditors and is willing to give up as much as 60% control of the company. On March 31st, 2021, China Evergrande Group, which is the largest property developer in the world and one of the most indebted companies in the world, was forced to pay back $1.78 billion in a maturing bond. Since then, Evergrande has been able to roll over its external debts, but it still has to pay back $3 billion in bonds maturing on April 30th, 2021. If it cannot make that payment, it will trigger a debt crisis that could reverberate through the entire Chinese economy. It is not an overstatement to say that the Evergrande crisis is a textbook example of how the property market, and more specifically land, plays a pivotal role in modern Chinese economy. For one thing, China's property market accounts for 12% of the country's total economic output. That is much more than what it was in 2000, when it accounted for 5% of GDP. The share has been gradually increasing since the early 2000s, and it reached its peak at 13% in 2017. It has remained stable since then. But it does not end there. Property development is also directly or indirectly related to other industries in China, including construction, finance, mining, cement, and steel production, among others. Therefore, when there is an economic shutdown or a slump in the property market, these other sectors are affected as well. This explains why property sales have always been among the most important indicators that guide the overall health of China's economy, because what happens to them will eventually affect all other industries. China's property market has an inherent structural problem due to its reliance on land sales revenue to finance construction costs. The problem is that there are always three parties involved when governments are selling land: the governments, developers or buyers, and banks or lenders. The government wants to sell land at a high price to maximize its proceeds from land sales revenue. Developers want low prices so they can flip properties at higher prices. The Evergrande crisis is an eye-opener. It is not a crisis yet in the sense that the company can still pay off the debts and survive. If a company goes bankrupt, its debt will be worth zero in nominal terms, but this does not mean that debt holders lose all their money. For unsecured bonds, the recovery rate for investors can be as high as 50% or even higher in some cases because of the value provided by assets owned by the company before bankruptcy. For secured bonds, default mainly means that they are forced to foreclose on assets and sell them at market prices. However, if a company cannot survive or grow further after paying off its debts, then there is no fundamental value in the company at all. This is exactly what many Chinese companies are facing now. They can pay back their debts, but cannot make profits and grow their business anymore. China's economy has been slowing down for years now. The coronavirus pandemic only adds another heavy blow to an already weakened economy. Many Chinese companies have accumulated huge amounts of debt during the past decades when China was growing rapidly, but now they are finding it very difficult to pay back these debts with a slowing economy and shrinking profit margins. Evergrande is a company that is betting its life on real estate prices going up by 50% or more over the next few years. That's because it needs to sell 550 billion RMB worth of real estate to pay back its principal. And this does not take into consideration the 240 billion RMB in new loans it will need to take out. Is this a realistic assumption? Evergrande can only repay its debts if it can sell land at much higher prices than all other developers are selling their land for. And if they can sell large quantities of land quickly, but even then, it will be very difficult because they are so highly leveraged.